It's newsletter time. Back to work tonight, guys and gals. Tuesday evening, September the 1st, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, my job tonight is to help us find the best entry setups for tomorrow. That's Wednesday's trading session, and I got a great video in store for you guys and gals tonight. The charts are already in the background, as you can see. Got the Eminis, we got the oil, and of course, we got that yellow metal. We got the gold futures on our radar for tomorrow. Speaking of radar for tomorrow, lots of great setups we're tracking for tomorrow's hump day, Wednesday's trading session. We got big moves on the E-minis, some ranges on the oil, and maybe some tricks on the gold. I'm going to break this down into a bunch of reliable setups I'm watching for Wednesday's trading session. Before we jump in, though, and get this video going tonight, though, I just want to make sure to remind you, subscribe to this YouTube channel. Hit that subscribe button here on YouTube so you don't miss all the good stuff we publish every evening on this newsletter. And don't forget, if you have any questions for me, any questions at all, drop those questions in the comment section below. I'll get them answered as soon as I finish up here this evening. And as always, I really appreciate you guys and gals tuning in every evening and supporting this channel. If you love the content here at School of Trade, hit that thumbs up button for me. Always appreciate you guys subscribing, typing those questions in, and thumbs up if you love the content on this video newsletter. But speaking of the newsletter, let's get this party going here, right? Time is ticking. Let's get this video going. Let's kick it off here with the calendar for tomorrow, courtesy of Econo Day. Let's see what's happening on the schedule. Now, of course, we got a couple big picture things going on this week, as we talked about in last night's newsletter. If we look at the big picture right now, what's happening in the big picture here this week? Well, we got the kind of the end of summer, right? Got to get the end of end of summer slowdown, right? So a little bit lower volume as we go into the end of the summer. The kids are still on break. They're going back to school soon. So, all the parents trying to do some stuff with them before school starts back up, right? So end of summer, a little bit lower volume, right? Kind of patchy, inconsistent volume here, kind of a typical, summertime week we're seeing here so far. We also have a new month starting here this week, which always means we've got jobs on Friday, and that means more volatility, right? So we definitely have some slower or lower volume, right? Volume is definitely a concern because the end of the summer right now, nothing really out of the ordinary. We expect that this time of the year. We also, of course, have, right, an uptick of volatility going on right now, because whenever we have a transition from one month to the next month, there's always some rebalancing. So there will be a little bit of nervousness, unpredictability, unpredictability, if I can speak here, my tongue in a knot there, right? So a little bit of volatility we're seeing right now, jumpy markets. We saw that today as well. We also started to hear, the old stuff comes back again. We're hearing more about stimulus right now. That is a big known unknown as we go into the next couple days here. It sounds like there still is a chance they may put together some sort of modified stimulus package, at least here in the United States. And then we keep hearing about this airline rescue plan, the don't call it a bailout rescue plan, right, for the airlines. And of course, we heard from the U.S. President Trump talking about that today in his press conference. So again, some of the big picture stuff we're watching for this week. Volume is going to be a little bit lower for the rest of the week, right? Volatility will likely continue for the rest of the week, right? But the big question I have is tomorrow, will we start to hear more? I'll tell you right now, the minute we hear a whiff about some positive talks going on regarding stimulus, right? Because right now, you've got one side of the aisle over here, right? You got one side of the aisle way over here, and they're just hating on each other right now, right? So if we can get these folks a little bit closer together here, right, and talking, I think once we start to get a little more, coziness going on here, right, on Washington, D.C., on Capitol Hill, we'll probably start seeing these markets really start to respond to some stimulus talk here. So hopefully we'll start getting some, warm, fuzzy stuff going on there on Capitol Hill. I won't hold my breath, right? I won't hold my breath. And I think the real big variable, the big wild card right now is that the airline don't call it a bailout, right? Rescue package for those struggling airlines, right? Because, of course, who wants to who wants to pilot an airplane right now, right with everyone else. So we know that is some of the known unknowns going on here, right, this week. What do we know for the rest of the week? What do we know for the rest of the week? Well, tomorrow, of course, is Wednesday. So Wednesdays always mean, well, almost always mean inventories. Next week, that inventory report will be on a Thursday because Monday's a holiday. But the big news for tomorrow, right? The big news for tomorrow, oil report on a Wednesday morning. Now, the big news tomorrow, though, is probably going to be a little bit earlier, right? The ADP employment number at 8:15. Then, of course, we got the petroleum status report at 10:30, and maybe some action right off the beige book. So if you've only got a little bit of time free tomorrow, definitely make sure you're paying attention to these times of the session tomorrow. Now, obviously, we'll be in our trade room tomorrow for that 8:15 and that 10:30 report, right? The afternoon session. We don't trade in the trade room, right? But that is definitely some potentially market moving events here for tomorrow. Now, remember, we continue to see some of the best setups between 10 a.m. and 11 a.m. Eastern time. So if you're really a busy person and you couldn't be at your desk very long tomorrow, maybe get to your desk by 9:45, 9:50, get the charts prepped up, right? Maybe come out and join me in my trade room. We open up every morning in our trade room at 8 o'clock Eastern time. What I'll do is I'll put a link to join me tomorrow morning in the description of this YouTube video, right? So definitely come in and join me tomorrow, 8 o'clock Eastern time we start. But again, if you could only be there tomorrow for an hour or so, that 10 o'clock to 11 o'clock hour is definitely a time to be there. We open up at 8 o'clock Eastern time. As we go through the rest of the week here, we get a bunch of news coming out, right, on Thursday. Thursday is going to be a really, really, really busy week, right, because that's pretty much the last full day of the week. Then we go into what will probably be a half day on Friday, because it's not just the non-farm payrolls number, which is a huge news report, especially this one. This might be the biggest non-farm payroll number we have all year coming up on Friday. So it's going to be a highly anticipated number. Thursday should be white hot. We should be very busy on Thursday. And of course, that's because there's that day off, right, on Monday. So a lot of stuff crammed into the last half of the week. Tomorrow, though, again, make sure you come out and join me, 8 o'clock Eastern time, right? We'll trade the reaction to the ADP employment, right? We'll sit around and wait for that, right, for that petroleum status report, trade the reaction to that. And then, of course, right, we'll provide our clients with guidance on the beige book later on in the afternoon. All right, so that's the plan for tomorrow. Some of the known unknowns. What do you think? Will we hear more about that don't call it a bailout rescue plan for the airlines tomorrow? I will be very excited to see what we get here for the rest of the week regarding stimulus and that bailout. I mean rescue plan, right? They keep calling it. Okay, let's go jump into charts here right now. I got some Eminis, I got some oil, and of course, we got the yellow metal, the gold futures on the chart here tonight. Now, gold's a pretty tricky one. I'm going to say gold might be the most difficult one for tomorrow. We're going to be a very big momentum. Momentum will play a big factor on the gold tomorrow. We'll take a look at that in detail here tonight. Over on the oil is probably the easiest one out of all of them. The only variable is that news report tomorrow. So we'll talk about how to apply the charts with the news tomorrow on the oil. And then you got the little engine that could, right? We thought the NASDAQ was pretty impressive yesterday. Boy, the S&P definitely flexed its muscles right here for today. Maybe it was empathy because of all the huge earnings reports we saw today, right, regarding some of those big stay-at-home names. Man, boy, look at that. The Zoom, right? The Zoom report coming out today. Incredible. So what's going on with the S&P here for tomorrow? Let's put this plan together. What do we know about the S&P? We know right now we were inside that range, right? Last night on the newsletter, we made that big move down, as you recall, late last night into the pre-market, and then now we've got that pendulum swinging back in the other direction, right? So it's a range. It's a range market, right? That range will act as a magnet, right? What goes down comes back up. What goes up comes back down. What do we do in a range market? We buy low, we sell high, we avoid the middle, right? The range is a magnet. Buy low, sell high, focus on failures. Well, how about this move right here, right? Well, what do we do now, though, right? Because now you can see this is one hell of a move higher, right? This is not just a bull run, but it's a pretty strong. It's a pretty impressive bull run. Right? Not only did those buyers, right? Not only did they push through the pendulum swing, which is honestly usually is a pretty reliable area on the other side of that trading range. They blow through the pendulum swing. That's pretty impressive. They blow through the measured move, right? That is also pretty impressive. I have to think now they're going to a gajillion next, right? Maybe not a gajillion, but they're probably going up here or trying to get up here into that 35.43 to 35.36, what I call my runaway zone in the trade room. So 35.36, 35.43, that area is probably where these buyers are hunting for. So very impressive work for the buyers, right? We spent a lot of time today kind of chopping around that weekend gap. We've been talking about that earlier this week, and now we just get this kind of late day rally. Maybe it's a sympathy rally because the NASDAQ, it's a little bit tough to tell what caused that. But of course, right, some good news from ISM today. Pendulum swings off the low. It does make sense. So the most important thing right now is we know we're bullish. I want to be a buyer. I think the most difficult part about being a buyer right now is just trying to justify buying so high up here, right? I mean, we're in the nosebleed seats right now, right? I need some Dramamine. We are so high on this chart, right? You can see that prior high. That was, of course, the big gap up to start yesterday's trading session. And we're still here, right? We're still holding nice and strong. In fact, we're closing right above that high. So I know I'm bullish. I'd like to be a buyer here. I have to be quite concerned about buying really high right now. You know what I mean? So I've got one pattern in my mind right now, one setup for tomorrow to buy the next pullback. They'll help me avoid buying high. So hold on to that thought here for a second. Another big clue here, though, is the strength of this last move, right? Look at that spike. Now, spikes like this, right? Spikes like this usually give me about 4 different potential chart patterns, right? One is a range, one is a channel, one is a flag, and one is a reversal. All right, so there's a lot of potential here for tomorrow. Now, obviously, I don't have a crystal ball, right? That crystal ball would be nice right about now. So what I'll do is I'll get ready for pretty much all 5 of these, right, of these scenario. My favorite setup right now, what I hope we get, is I hope that we get a nice deep pullback. Now, again, we're bullish, so I want to buy at support, right? So I've found some prior swings. I've marked up a high down to that low. I really like this area, right? Like this area of support. What I don't like about it, though, is just, again, we're going to be underneath this resistance zone, right? We'll be kind of back underneath that level of resistance. So we're bullish. I want to buy a pullback, but how do I avoid buying into that prior high like that? There's a pattern for this, right? There's a pattern for this, and it's called a trap pattern. What I'm looking for is I'd like a nice deep pullback. I'd like to see us get just below the moving average. Then once we start to pull back, I'm looking for bears trying once. I'm looking for bears trying twice, and this is where some patience will come in. Believe me, this is not easy because it's going to feel like this market is leaving the gate without you, right? It's going to feel like it's going without you, but I like to stay patient on these. Again, it's called a trap entry setup. We're bullish. I want to buy the pullback off support. I just worry about buying right into that high here still, right? So that's my easiest or my most reliable way to participate in this pullback, but at the same time, make sure I'm not buying too high here. Now, these trap patterns are by far my favorite of all 4 of my entry setups. And you know, I talk about all my favorite setups, including trap patterns, in our free trading course. So if you haven't done so already, I would definitely grab the little pop-up that pops up there. I would grab that link and get registered for our free trading classes. That way, the next time I say look for a trap, right, like the trap I'm looking for here on the S&P, you'll know exactly what the rules are, you'll know how to find them, and you'll know how to trade them. Again, grab that little button that popped up there in the upper right-hand corner, get registered for the free trading class. You'll learn traps, failures, breakouts, pullbacks, reversals. You'll learn all my favorite entry setups as part of that free trading class. And again, like I mentioned earlier, I'll put all of the membership links for tomorrow's trade room. I'll put all the important stuff for you guys below this video, either in the description, or I'll put a big button for you below me on the trading blog here tonight. Now, That's what I hope I get right now. Nice deep pullback. Let's talk about what might happen here, though, because there's a lot of wisdom inside of these spikes, right? There are really 4 scenarios you're looking for after a spike. One is a spike in channel. Okay, that's the most common. The other is a spike in range, right? Spike in range, also very common. Right, so these 2 are probably, on average, probably the most common 2, right? One's a range, one's a channel. The other's a flag, right? So you want to be ready for a flag. And then the other would be a reversal, right? And that would be basically it's the V-top, right? Move up and then a 1, 2, 3 reversal. So how do we trade these, right? How do we trade this? First of all, on a spike in channel, we talked about this last night, right? Spike in channels, you want to wait to buy the deep part of the pullback, right? The base of that channel. On a range, what do? On a range, right, you buy underneath it with a failure pattern, right? Remember those failure patterns. How about a flag pattern? Flag patterns are a little bit tricky. You want to wait for that trap and then buy into that failure. Wait for the trap high, buy into that failure. And then on reversal, it's a 1, 2, 3 reversal. What we'll do is we'll draw off the low, find off the high. Can I squeeze it all in? And I'm going to sell off that, right off of that high. Sorry, my Bob Ross didn't exactly get the formatting done there, right? But grab that screenshot, right? Pause the video if you want to. Grab that screenshot because anytime I see a very strong spike, right? These are what I'm looking for. You ready? 1, 2, 3. Let's get back to the chart now. So now that I've got my chart back up now, let's forget about all of this stuff. Let's just say, for example, now, right, we have the spike in channel, right? Spike in channels are always one of my favorites, right? So if we run up, we start going sideways. What's the best way to trade that? The best way to trade it is wait for that pullback, right? Wait for that pullback. Wait for those bears to come in. What I want that pullback to the base of that channel, right? Wait for that deep pullback. Wait for the moving average to come over. Get those bears to come in and try to get short on the pullback and buy into their stop losses. Okay, basically it's a failure pattern, right? Failure pattern below the low of that spike in channel. Maybe we don't get a channel. Maybe it goes sideways up here. Now it could go sideways here. It could go sideways up there. It really doesn't matter where it goes sideways. But if it does start going sideways up here, how do we trade that? We look for buys underneath the range. What pattern? Failure pattern. Again, wait for the market to run lower. Wait for those counter trend breakout sellers to get short off the EMA, right? And buy into those stop losses, right? Another example of a failure pattern. Now, second one here, right? Sorry, third one. It's late in the day, right? Third one, a flag. Now, these are a bit tricky. Flag patterns, right? They start slowly like this, right? They go up, they start strong, but they start kind of slowly pulling back, right? You'll know it's a flag because the channel will be it'll be almost flat, right? It won't be, well, you'll see what a reversal looks like in a second, right? I'll show you what a reversal looks like in a second. When you see what a reversal looks like, it's not a reversal. It's very slow. It's very sluggish. What you want to do with a flag pattern is you got to anticipate there are going to be sellers trying to get short, right? They're going to try to short that thing thinking it's a bear channel. It's not a bear, right? It's not a bear market. It's just a bear channel that is basically pulling back to allow buyers to buy low. What you want to do is you want to wait for, and again, this takes a little bit of patience, and I know it's tough because it's going to feel like it's going without you. You want to wait for the market to make a run up, wait for sellers to come in, and they're going to try to sell with a trap high up there. They'll try to trap high and dump this thing back down lower, and they might be successful, and I'll show you how to trade that in a second. If they're not successful, though, their stops are sitting right up here, and you're going to need those stops as fuel, right, when you buy into those highs, right? You're buying now into those stop losses using those bears, right, their stops as fuel. You're going to need that fuel because you're buying relatively high up there, and oftentimes it'll just snap right back up, right back into the high, move that stop to point of entry, get rid of the risk, and then leave the runner to run up into that runaway zone we talked about earlier. And then last but not least, right, the one that's probably the easiest is the reversal, right? The market goes up. We see a sharp pullback, right? Kind of like a V top, if you will, right? We a sharp pullback. Market rolls over, holds the moving average, and runs. Right? What is that called? It's called a 1, 2, 3 reversal pattern, right? So that is the reversal. Now, I'm not selling that first pullback, right? Yeah, we're not going to sell that first pullback because it's not what? It's not a bear market. Right? We're not in the business, at least not on this YouTube channel and not in my trade room, right? Not in my trading strategy. I'm not in the business of calling tops and bottoms, right? As I always say to my clients in our trade room, there's more money lost trying to predict reversals than just trading with the darn trend, right? Believe me, I know it's very tempting to want to call tops and bottoms because they look so easy in hindsight, right? But I'll tell you right now, they're a lot more, you probably already know, right? They're a lot more difficult to predict than they appear to be. And don't give me any of that, well, I use divergence, and come on. Use divergence for a few months and let me know how that works for predicting reversals. But if I can get a 1, 2, 3 reversal, right? If I can get a 1, 2, 3 reversal pattern, again, where bears show me proof, now it's on. Now we know where the magnet is, right? We know where they want to get back to. I'm going to mark up that low. I'm going to mark up that high. And I'm going to sell that first test, right? That first test off of that high, right? That first test off the high. So now we have a pretty good plan, right? For how I want to trade this, right? Trade this market right now. Do we get that pullback with that 1, 2, that trap? Right? Do we roll over? 1, 2, 3, right? Do we roll over and get a reversal? I really could care less what direction I trade in. I'm looking for good setups, right? That's all I care about. So will we get the reversal? Will we get the range? Will we get the channel, the flag? Only time will tell. Now, again, I cover a lot more detail on all of those patterns, especially the spike in channels and reversals in that free trading class linked up there in the upper right-hand corner. Grab the link or grab in the description. Whatever you do, though, don't miss this opportunity to learn one of my favorite setups, right, for free as part of that free trading class. All right, let's keep going here. So the S&P looks pretty good right now. We're kind of waiting to see what we're going to get here in the overnight. How about some oil, right? How about some oil, some Texas tea? What do we got going on here on oil? So, first things first, let's take a little bit of a bird's eye view here. Talking about bailout packages for the airlines right now, right? Let's go up 30,000 feet and take a look at what's happening right now. Boy, I haven't been on an airplane. When was the last time I was on an airplane? Jeez. It's crazy. We basically have a trading range, right? It's a triangle. We've got lower, right? We got lower highs. We got higher lows. We got that rectangle right in the middle. Now, what do we know? Well, what does a range tell us? Ranges tell us that the middle is the magnet, right? That no trade zone, right? That's the magnet, right? What do we do in a range? We buy low at support and we sell high at resistance. The most important thing to remember about a range: buy low at support, sell high at resistance, right? Not just in the middle of nowhere, and avoid the middle. Now, what are the best entry patterns when it comes to a range market? Failures. Well, failures and traps, right? Failures and traps are my go-to patterns when it comes to ranges. Now, what's the hardest part about a trading range? The hardest part about a range is how momentum, how important momentum is. One of the kind of tricky parts about ranges is that ranges are supposed to be balanced. They're supposed to be sideways, but yet momentum plays a really, really important role in how we trade them, right? Let me talk more about that here. Now, I've got my triangle, right? I call these triangles wedges are directional, right? This is a balanced triangle. So I've got my sell zones above. I've got my buy zones below. Okay, the most important thing for this oil is stay out of this middle area, and I know it's not easy sometimes, right? I know it's not easy. Stay out of this middle, right, and look to get down in the buy zone, right, or up in the sell zone. Buy low and sell high. Okay, now, this is where momentum comes into play. Because, for example, if the market takes off to the upside and runs very strong like this, I have to be very careful selling into that because of all of that momentum. However, if the market takes a pit stop for a while and sits inside the middle of that range and then goes higher, Totally different ball game, right? Totally different momentum plan now. Does that make sense? That's the variable. That's the nuance that really separates a lot of rookies from professional traders, right? Because professional traders know, okay, I do want to sell up here, but if the market runs all the way back higher, I mean, come on, am I really going to step in front of that freight train? No. I'm going to wait for the buyers to try once. I'm going to wait for those buyers to try twice. Once they do, now we know everybody's in, and now we know where stops are. Now we know where pain points are, right? And now we can sell into those stop losses. However, if the market, of course, I want to sell above the highs there, right? If the market sits in the middle for a while, and then makes a move higher, well, now that momentum isn't nearly as concerning. It still is an issue, right? And I still don't want to try to pick a top. What I'll do is I'll now look for something like this, right? Where the market ran up, the buyers try to buy the pullback, and whoops, right? We sell into those stop losses as it runs lower. In fact, this is a very common combination, and that is a buyer failure into a seller pullback. We see these a lot, right, on these charts, right? So buyer failure above the moving average, right, into seller pullback. Now, obviously that seller pullback was probably a little bit too close to the range to be that reliable, but that's the idea, right? So if we go up, right, if we go up here right now, if we go back, right, go back over, we go up, buyers, of course, now will come over. They'll try to buy off the EMA, right? We know exactly now where their stops are, and we can sell into stops, and we can sell the pullback as long as that pullback doesn't put me right inside, right, the middle of that trading range. So we have the range, right? We can easily see that triangle coming together, right? The range here. The key right now is stay out of that middle, wait for those highs, and wait for those lows. Now, good example, right? So strong move down. If we make another leg lower here, now we're on, right? Now we look for seller failures into bullish pullbacks, right? Seller failures into bullish pullbacks. But hold on. What if we go lower than that though? Right? What if the market really, what if it really nosedives down? Then what do we do? See, I still want to buy this. But this is where momentum, you know what I mean? This is again, this momentum plays a big role here. So in this case now, momentum is very, very strong. As the moving average comes down, what's the best plan of attack here? Let him try twice, right? Let him try once. Let him try twice. Now, there's a lot of different kind of variations to this type of setup. For example, sometimes the two try, right? Sometimes those bears try twice, and it's nice and separate, right? And you can buy off a trend line. That's one of my favorites. It's probably the most reliable way to do it, right? So one try for the bears, two try for the bears, and now we're buying off that trend line. Now, sometimes what happens is the market makes a big run lower, and it kind of goes sharp. Right? It goes like this, right? One, and then goes up like that. Now, in those situations, that tells you traps, right? Traps. You want to get as low as you can there, right? So there's some nuance to this, right? See, those are two different, two different things, right? So there is some nuance to that type of entry, but we'll go over more of that tomorrow, obviously, once we know exactly what we're getting here. But again, there's a big difference between a move going lower, right, into that first battle zone, the first buy zone, bears try and fail, and we're buying it back up, right? There's a big difference there between there and here, right? We go all the way down, right? I'm looking for that one, that two, and then back up from there. So that's a good example there. I want to buy, right, at these support areas, but I want to buy either with basically a seller failure or what I call a nested failure right off of those lows. Oh, and one more thing too, if we do get that big move down and we do get those nested failures, remember what happens a lot of times is you're going to get those rips, right? The market will rip higher here because of all those bears getting caught. And when that happens, you don't want to chase after it. Right? Remember, we're buying those stops, right? We're buying nice and low. We're not trying to buy way up here. But keep your eyes open, though, for what we call a trap setup just before we go back into the range. These are very, very common on these really deep pullbacks, right, that start to snap back up into that trading range. So keep your eyes open And you know me, I like to use the 2-try rule in this trading strategy a lot, right? The markets love to move in twos, but if we do whip right back higher again, right, watch that trap entry on the rebound, right? Watch that trap entry on the rebound. So that covers a lot of detail now as the market goes lower, right? We know as the market goes higher here, stay away from the middle, right? Up, buyer failure, back down in. Do we roll higher? If we do, 1 try for the bulls, 2 try for the bulls, maybe a trend line there, and selling it back down in. Now, I think one of the most difficult parts about this would be you've got that big, where is it? There it is, all the way up there, 43.82. Now remember, there's a rumor going around about this, don't call it a bailout rescue plan that I keep joking around with you guys about, right? But in all seriousness though, there may be a very strong move higher, right? We may see a whisper of this rescue plan, and this thing may really start to crank. We also have, I'm seeing some headlines right now about hurricanes coming. Now, there's a lot of inventory out there. We saw how the last hurricane, who was it? Was it Laura? I forgot already how busy the world is right now. But we had a hurricane last week, right? 2 weeks ago, and we didn't see oil move very much at all. And that was surprising. But when you looked into the actual, we're swimming in oil right now here in the U.S., so it didn't affect us too much. But I think the rescue plan, that bailout plan really has potential to send this market running. So where would the buyers want to go? The buyers would want to go to that 43.82, right? So if we do get something that lights this fuse and this market starts ripping, for example, we may see it run up, we may see it hold the pullback, right, and jump off the moving average. If I can get that, keep in mind, they didn't do it there. Right? They haven't been successful yet. We've seen a lot of big, strong moves, but they haven't been able to hold, right? Lots of strong moves, right? Very strong move, couldn't hold. Very strong move, couldn't hold, right? Big, strong. Look at this last one. Look at that bad boy, right? Big, strong move, couldn't hold, right? So, we're not going to go predicting any big breakouts right now, not until we see some proof of that. But if I can get that proof, if I can get that 1 strong move up, that 2, that pullback, and that go, okay, now we know what we're looking for. They want that 43.82. They probably want to get to that 45 level eventually. I'm going to mark up that high. We'll mark up that low. We'll find that hidden channel. And this is where you're going to have to get aggressive on this, right? You're going to have to get a little bit aggressive on this entry here because, as I always say, this is one of those patterns you got to hurry up and wait, right? It's a wait, and then hit it, right? Because you don't want to take the first pullback, right? If you take that first pullback, that means you took that one too. So we don't want to take the first pullback. We want to wait for that 1, 2, 3 move, and then again, when it pulls back, you got to hit it. I know it's scary sometimes, right? But it's a very, very reliable entry as long as you're getting that 1, 2, 3. In this case, 1, 2, 3 breakout, 1, 2, 3 reversal off of that low. Now, every once in a while, the market just picks up and runs. So if it really does start to run here, and we're starting to get some news headlines starting to flash on the screen, I will keep an eye out for that 2-try breakout, 2-try trap pattern, right? Also one of my favorites. Now remember, these types of entry patterns, I always like to try to incorporate them with some additional channel, right? So I'm always looking for, looking left, finding additional support, right, to kind of latch onto there. So we'll obviously do more of that tomorrow morning in the trade room once we get there. But buy low, sell high, focus on breakout failures. And remember, the hardest part about ranges are what? No, not sitting on hands. It is difficult to sit on hands in the middle. It's momentum, right? How the market feels as it's rotating back and forth, right? Does it just crush back and forth, right? Or do we kind of sit there for a while and then poke our heads up? That will determine the right entry setup. Right? Now, I'll tell you, that takes a while to learn. It really does. In fact, I have a question for you real quickly here. If you could go back in time again, right? Let's grab Marty, right? We'll get in the DeLorean. I might be dating myself right there. I was just a little tot when that movie came out, back when they had flying cars, right? In the year 2020, we're waiting on Elon for that, I guess, right now. But the reality though is, question for you: if you could go back in time and do this over again, what's the one thing you wish you would have learned, or what's the one mistake that you wish you would have avoided? I know exactly what mine was. I know exactly what I would have avoided if I could go back in time and do it over again. Do me a favor, post that answer in the comment section below, right? Post the answer. If you could go back in time and do this over again, right? Down in the comment section below, what would you do differently, right? What would you do differently, right? I'm looking forward to hearing your feedback on this. If you could turn back the clock, right? What's one thing you wish you would have learned? What's something that you would do differently that would make everything a whole lot easier for you? I'd love to hear some of the wisdom in the comments section below. And if you're still watching right now, hashtag still here, hashtag 1%. You know, I work hard in this newsletter for people like you because you watch these things all the way to the end, right? Now, speaking of the end, let's wrap this sucker up with the gold. Gold might be the most difficult market for tomorrow. Let's take a look at the big picture here on the gold, and you can kind of see what's going on right now. And we talked about this last night on the newsletter. You know, I thought we had a spike in channel on there, but it looks like now it was more like a range, right? And it's a range. Now, what do we know about ranges? We know they're balanced, right? We know that the middle of that range is a magnet, right? We know what goes down comes back up. What goes up, well, usually comes back down. You can see there was quite a bit of bullishness there at the beginning, but you see where they ended up, right? They landed back down into that trading range. So what goes down comes back up. What goes up comes back down. What is so interesting about that move higher, I don't want to get off topic here. What is so interesting about this move higher, though, is you can see they didn't hold the pullback. We talk about this all the time on this newsletter. I don't care how big the breakout is. Hold the pullback. Show me you mean it. Show me you really want. And you see they couldn't do it, and it collapsed back down in. That is in all reality, yes, it's very big. In all reality, that breakout failure and this breakout failure are pretty much the same, right? Big, strong breakout, and they fail. Big, strong breakout, and they fail, right? So not a 1, 2, 3 breakout pattern. And a very interesting example of just kind of the stuff we're seeing right now. Again, low volume, end of summer. We're getting a lot of those kind of jumpy moves here, especially on markets, kind of relatively illiquid markets like the gold futures. All right, so it's a range, and we're back inside of that range. Now, you'll notice I measured this. Measured the amount of the move higher and the amount of the move lower. So right now, the bears, they love to get down to that 1946. Now that seems like quite a big bite to chew on for tomorrow. We'll see if they can make that move all the way down like that, especially right in a stimulus, right, rescue plan, bailout environment right now where they're throwing money at these markets. It does seem like selling gold is a little bit more difficult of a pill to swallow, especially right with that 2,000 round number just itching to be retested for tomorrow. But we can definitely see the bears. I think it's pretty easy to see the bears have momentum on their side. But this one really big problem for the bears right now, they already got what they wanted. There's no urgency. There's no FOMO. There's no scarcity. And we talk about this in our trade room quite a bit. Whenever we see a strong move in one direction, we expect to see another leg in the same direction. At the very least, it makes a retest of the low. At the very most, right, it'll do a measured move, or in a range environment, a pendulum swing. So I call these open loops. You probably have heard me talk about this a few times on the newsletter, and we do a lot of this work with our clients in the trade room. Again, you can join the trade room tomorrow. I'll put the link in the description of this YouTube video, or I'll put a big button for you on the trading blog below this lesson. Now, we see that big strong move down, right? That opens the loop, right? And then sure enough, look what happens. The market pulls back. Classic buyer failure into seller pullback combination. We talk about these all the time, right? We just mentioned one on the oil, right, and on the S&P. A classic buyer failure into seller pullback combination, and they retest that low. Just classic, right? That is pretty much a buy the book, strong move down, wait for the pullback, wait for those buyers to fail, and back down again. But now here's the problem. They did not keep this party going, right? They didn't keep it going. They closed the loop, and they just kind of sit there. Right, so for all intents and purposes, the market is bearish, but there's no urgency here right now. It's not like we have this big move down. It's not like the S&P, right? Look at the S&P. There's a ton of urgency on the S&P right now. Are you kidding me? Right? The S&P might as well have a big neon sign, right? Blinking FOMO. Don't miss the next leg, right? That's what that tells every trader. Right? That big move higher says, shoot, I better get in before I miss the next one. There's FOMO there. There's urgency there. There's scarcity there, right? We don't have that any longer on the gold. And I hope that makes sense, right? Now, okay, Joe, so if we don't have the FOMO, we don't have the urgency, then what do we do now? We don't have that sense of urgency any longer, so we have to either wait for one of two scenarios. One, either we have to wait for some more urgency, in other words, another open loop, another strong leg lower, or we have to let the other side of the market get in trouble and use their stops as the fuel, right? So think about it. We can either use FOMO as a fuel, right? So for example, if the market runs lower here on strength, and it opens up, as we say, right, opens up that loop, right? Now there's a ton of FOMO. There's a ton of scarcity now. There's a ton of urgency now. Okay, so now we've got that as fuel, right? We have that as a mindset of the market. Mark that low, right? Mark that high, and we're selling off the high of that channel, right? Plenty of urgency there, right? Plenty of urgency there, right? However, if we're sitting right here, though, the second option is we have to let the other side of the market get in trouble, right? Basically dig their own grave so we can run their stops and use their stops for the fuel because we don't have that urgency any longer. And where would that happen? That would happen, think of this almost like a little mini range right here. Well, it's actually bigger than the original range, right? But think of that as a range right here. And think about as it goes higher, what's going to happen? Breakout buyers. Right, buyers are likely they're gonna miss and they might be right. Let's be honest, right? I mean, I don't know all the answers. All I know is who has control right now. So this could easily poke higher and run right back to that big round number, right? So it's not the buyers can't do it, but the buyers are likely now, if they don't rotate lower further, they're gonna pop their heads up the highs here. And this is where we look to use their stops as fuel, right? Once I get that bounce off of this low, now let them get into trouble trying to buy that pullback, and we can now sell into stops. And then once those buyers get stopped out, they become sellers, and we have the fuel that we need. Does that make sense? Right? So we have no urgency right now on the gold. So do we keep on going and open up another loop, aka right on the way down to that pendulum swing? Mark up that low, mark up that high, and get short. That wasn't it. Get short. There we go. My pen is all messed up right now. Right? Get short off that high, right? Because that strong move that builds in the FOMO, right? Plenty of FOMO there. Or do we wait for this market to poke its head higher? Let those buyers just wrap that rope around their neck up there and use their stops as fuel, right? That's the other fuel we can use. But we need an edge. We either need some scarcity or we need to use those stops because right now, there's not much else we can do with this. If we sit inside the range right now, I'm going to wait for it to pop, right? Because it's a range, right? It's a range. Wait for it to pop. Wait for buyers to come in, try to fail, right? Try to buy it, and we sell back down in using that range, right, as a magnet. And then how could I buy this, right? Could I buy this market? You definitely can. There are two ways I'm looking to buy. Well, I mean, I guess three, but really two ways to buy it. The easiest one to be a buyer is to wait for that move lower, right? Wait for those bears to finish off, right? Finish off their, whether it's pendulum swing or whatever, right? But wait for those bears to finish off their move and then look for that 1, 2, 3 reversal and buy it on the rebound. There's nothing wrong with that at all, right? So just imagine right now the market, we do get that run lower. We do get that channel right? They get their move down, right? They finish their objective. They get what they want. And then what happens is profit taking. Now the range acts as the magnet. We go 1, 2, 3. We get that reversal. Mark up the high, mark up the low, right? We buy the low of that new hidden channel, right? You're buying on the rebound, right? You're buying on the rebound. And the other kind of scenario would be if the market punches higher, right? So for example, if we go 1, 2, 3 reversal, right? And we blow right through that area, that is a reversal. Again, they didn't do it there. They didn't even do it up here, right? So they've got to prove it to us they want this. Then I can mark up that high, mark up that low, and I can get aggressive on the way up there. That's going to be tight, though. That's going to be a difficult pattern to get into. You're more likely going to see if it does go higher, you'll more likely get a strong kind of rip, a shallow pullback, a higher high, and a trap. Because traps are always, traps are your best friend in a lot of situations. In this one, you're trying to avoid buying high. So you wait for those bears to try to short this thing, and you buy that little trap low for that move back up to retest those, right? To retest those highs, right? Retest that pendulum swing high and park it around that big round number. Now, obviously, there's a couple things I probably missed here, right? What if this thing goes 1, 2, bam, right? Big, strong move up. So we'll definitely have some things to look forward to tomorrow in the trade room, right, for both directions on this. But at least that kind of gives you an idea of what the most important fundamentals on this gold for tomorrow. Now, the most important thing for your trading career, right, is, again, if you haven't done so, grab that free course. Right? Grab that free course as part of our free trial, right? Get registered for tomorrow morning's trading session, 8 o'clock Eastern time, Monday through Friday. I'll put all the info you need in the description or a big button below the video tonight on the trading blog. Please don't be afraid to call me in the office. I'm always here to help if you guys need me. Don't be afraid to use live support on the right-hand side, right? There's little live chat buttons there if you guys ever need any help along the way. And make sure you subscribe. I hope by now I've earned at least a thumbs up from you tonight, right? Maybe a thumbs up, maybe a subscribe. Again, if you go back in time, turn back time, what would you do differently? I want to hear from you down in the comment section below. And most important thing, make sure you come back and see us again next time. Tomorrow morning, 8 o'clock Eastern time in the trade room. If not, come back and see us tomorrow night. We'll see how the game plan looks for Thirsty Thursday's trading session. Will we hear about the bailout? The rescue plan for tomorrow? I'm looking forward to more information out of the news headlines as well. But that's it for me. Time to rest up. Enjoy the rest of your evening out there. Have a wonderful rest of your day. I'll see you guys tomorrow. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.